The future of the economy. Edward Lawrence sat down with Kansas City Federal Reserve Bank President Esther George ahead of the Jackson Hole Summit kicking off today. Edward, over to you.
Yeah, Maria, I had a wide-ranging interview with Kansas City Fed President Esther George. She talked about how she believes that the Federal Reserve is on the right path with the gradual rate hike increases. Also, how the yield curve alone is not an indicator of a recession. And she addressed the president's comments about the Federal Reserve. But first, she talked about her assessment of the economy right now.
I think the economy in the aggregate is doing well. I describe it as firing on all cylinders, and we're at a good point right now in the economy, which has allowed the Federal Reserve to begin to remove some of the stimulus that we put in place years ago.
So then what do you see the risk factors in this economy?
Always risk. And I think for me, I characterize them as both upside risk. Right. So things like a pro-cyclical fiscal policy, which is boosting growth. Right. At a time when we have accommodative policies. On the downside, I look at things like the uncertainty that's coming from the trade discussions and where will those come out. We look at what's going on in emerging markets to see some of the challenges they face. So you look at both sides of that risk equation. I think right now they look balanced, but by the time we get to our September meeting, you have to reassess.
How close do you think we are to normal?
That's a good question, and it's one I think my colleagues and I continue to explore because our objective is to maintain the long-run growth of the economy as best we can, and trying to understand when we get to normal is a function of knowing, remember, this policy acts with lags. So each time that we have made an interest rate increase, that will flow through the economy after the fact somehow. And so that's why you focus carefully on what do we see in the data, what do we see in the trends, and what are we talking to people in our regions about, in my case, to understand how that policy is affecting people in the economy.
How do you feel about the yield curve as an indicator?
So I understand why people look at this, and we should look at the yield curve, because history tells us that when the yield curve flattens and then inverts, we've experienced recessions. And obviously, no one wants to do that. So the question is, what circumstances lead to that inversion, and why are we seeing a flattening yield curve? And that's where I think the debate is right now, of trying to understand what the dynamics are in the economy. Because remember, we are still at negative real rates, so even though that short rate's been coming up, trying to figure out what's suppressing the long end of the curve. Is it because investors believe that the Fed's gradual approach, managing inflation low, means longer-term rates won't be as high? Does it mean that because we still have a very large balance sheet and other major central banks are continuing to add to their balance sheets, that could be suppressing that? I don't know the answer to that, and we won't know it. But that's why I think we pay careful attention to the yield curve. But it's not our sole objective, obviously, as we go forward.
And that's not something you look at solely?
You can't look at it solely, because remember, what I have to look at is the mandate Congress gave us. But you look at lots of signals, and the yield curve is an important one, and I think my colleagues and I are going to keep our eye on that.
And the inversion, you mentioned the inversion, that is an indicator for you, one of the indicators of possible recession. Okay.
It could be. But again, predicting a recession isn't a very good business to be in, is it?
Yeah. The U.S. is imposing $16 billion worth of tariffs this week.
Right.
That would make $50 billion worth of tariffs on Chinese products alone. We've also threatened or have tariffs on other countries like the European Union, Canada, and Mexico. How big of a concern are these tariffs for you as the economy grows?
Right. So this is an area I watch very carefully, and as I told you earlier, I consider it to be a downside risk from the standpoint that it's hard to gauge. If this is all we see, then maybe we would conclude that will work through the system and it won't affect economy the size of ours. On the other hand, if it looks like this will continue, if there's some persistence to these discussions, if it leaves businesses feeling uncertain, that could flow through to holding back on investment or less investment. And that's something that I'll want to watch carefully to see if that will show up in the data at some point.
This week, President Trump told Reuters that he was unhappy with Fed Chairman Jerome Powell because of the rate hikes. The President's Office of Management and Budget Director in June said that the Federal Reserve puts the brakes on the economy just as it's getting good. What do you think about these comments? Does it concern you when you hear these things? Does it affect you in terms of your decision going forward?
So here's how I think about that issue. Expressions of angst at a time when there are higher interest rates is not unique to this administration. So we've seen this before, and we know that higher rates do cause adjustments in the economy. I think what's important for the public to remember is Congress understood this tension might exist between a central bank that was responsible for the money supply and those that have other angles in the economy. And so they put important firewalls in place that would allow an institution like the Fed to keep its focus on the public interest and the long-run nature of the economy. And that's what we're doing, and that's what I continue to do.
And Kansas City Fed President Esther George will be a permanent voting member on the Federal Open Market Committee starting next year. She also said that she listens to everyone from farmers to business owners to workers, also politicians. But she said at the end of the day, it's the Federal Reserve that will decide what's best for the monetary policy of the U.S. Maria?
Edward, that was a great interview. Thank you so much. Edward Lawrence joining us there.